So here's why I think gold is a bad investment. So GLD is an ETF that tracks the price of gold. And if you look at the chart for 5 years, if you look here for the past 5 years, if you had bought it 5 years ago at 127, guess where you're at now? You're at 121. So buying gold, so if you held gold for 5 years, you would have been losing money. Not only did your capital depreciate, inflation made your capital worth less, and you missed out on making minimum dividends or minimum interest in a savings account at a bank. Go back even further, all the way to 2004. Let's say you had bought it in 2004 at $45. In 2018, it's trading at 121. So that's really best case scenario. And now worst case scenario, of course, is if you had bought it in 2011 at 177, and then 8 years later, it's trading at 121. So I don't understand why people love gold when the general market is performing badly. You'll hear a lot that you should buy gold when we're hitting a recession, or if we're going into a recession, you should buy gold because it tends to move the opposite direction as everything else. So past year from 126 to 121, so you would be down no money. Past 5 years, you'd also be down from 127 to 121. Unless you would have bought in December 2015 at 101, then you would be up 20% in 4 years. If you had bought in 2011 at 177, you'd be down 32% if you had bought in 2011 and still held on to it in 2019 in about 8 years. So the only time gold would have been a very good investment is back in 2004 if you had bought it in 2004, or even in 2009. From 2009 to 2011, in 2 years it went from 90 to 177. And obviously if you go even further in the 90s and 80s, basically any investment before the 2000 went up. But where we are right now, I don't think gold is a good investment because, as you can see, for the past 10 years or for the past 8 years, it's been down. Plus, when you hold gold, it doesn't pay you any dividends. So the only way you profit from gold is from buying and selling. Now, how long do you have to wait to actually profit from gold? It is far from being one of the best investments out there. There are way many better investments out there for you to even consider gold. And if you would consider gold just because you fear a recession, that means you're basically timing the market. So if you think there's a crash coming and you want to buy gold because it moves the opposite direction of everything else, so when should you buy gold? Should you buy now? What if you buy now and it just stays at this price for the next 2 years? So if you're going to time the market, then you're playing a different game. If you're going to time the market, then you can time stock. You don't have to buy gold just because you think we're going through a recession. So I don't think gold is a good investment. It doesn't pay any dividends. It doesn't generate any income. The only way to profit from it is from buying it low and selling it high. But the last time you were able to profit from it is back in 2004 if you had bought it in 2004 or even in 2009. But if you had bought it during the crash in 2009 at $71 and kept it till today at $121, you would have been better off with just an index fund that tracks the S&P 500. Plus, that index fund would have paid you some dividends. Now, if you look at gold stocks, gold companies that sell gold or produce gold or extract gold, the two biggest in Canadian is Barrick Gold and Goldcorp. And as you can see here, Barrick Gold for the past year, same thing, neutral. Past 5 years, also neutral, as you can see here. So you hold an investment for 5 years, doesn't generate any capital gain, and not even 2% dividends. It was paying less than 2% before. And if you go back to 1995, it was trading at $30. Now it's trading at $16. So if you're even holding for long term, if you're someone that holds for 25, 30 years, you'd be losing money. You'd be completely at a loss here. 50% down. Not only 50% down, but with inflation, it's actually worth even less. So gold really is a bad investment in my opinion. Now, it might be good to trade because of the fluctuation in the stock, but it's not an investment. There's a difference between investing and trading. Trading is just taking advantage of the fluctuations of a stock or a commodity. So it has nothing to do with gold. It's not the movement, the fluctuations is not exclusive to gold. You could do it with cryptocurrency, Bitcoin, or any stock. So that's trading. But if you want to invest in gold, as you could see just by looking at Barrick Gold, the biggest gold producer in Canada, if you had bought the stock in 95, you'd be down more than 50% today with very little dividend to show for. Now, if you look at the past year, the lowest it reached was 12.54 and the highest was 19.49. So it would have been good to trade or swing trade if you had bought it at 13, for example, and then sell it at 15 or 16. But as an investment, as a long-term investment, definitely not a good idea, as you could see simply from the charts. And it pays very little dividends. If you look at Gold Corp, so 5 years, you'd be down. So if you held this stock since 2014, you'd be down from $30 to $12. From 2002, if you had bought it in 2002 at $15, it's trading today at $12. So you'd be down. In 17 years, you would still be down. And now imagine if you had bought it in 2011, $54, and now it's trading at $12. And look at the difference, less than 1%. Now it could be a good short-term play, but very short-term. But basically you'd be timing the market. You would have to assume that you're buying. You would have to guess the lowest price or be very close to it in order to sell a little bit higher and make a profit. But in terms of a long-term investment, in terms of dividends, it's not there. It's just a bad investment because it requires you to really time the market and really guess the lowest point or get in at the lowest point. But if you compare it to any other stock on the stock market, even if you don't buy it at the lowest point, eventually with time, stocks go up. And if you buy a stock that pays dividends, well, you're collecting dividends. But gold companies, as you can see, pay very little dividends. Stock performance is terrible. And if you buy an index fund or an ETF that tracks the price of gold, like GLD, as you can see here, the only way you would profit from the price of this commodity is if you had bought it at the right time back in 2004 or even 2009, but you had to have sold in 2011. So as an investor, you don't know what's the lowest and what's the highest. Maybe as a trader with technical indicators, or you could figure out what's the lowest and what's the highest. But as an investor, you'd be stuck with this. If you had just bought a bank stock, let's say CIBC. So 1 year CIBC is down, but if you look at 5 years, it's up and it pays dividends. It pays good dividends. If you look at 95, it went from 16 to 103 with dividends, of course. Now, the only thing gold is good for is jewelry or accessories. Basically buying a gift for someone, or specifically for a woman, I guess. Best gift to give is gold jewelry because it never loses value. It's the only gift you can give that will either keep its value or maybe slightly increase, because at any time you could sell the gold or the jewelry basically almost for the price you paid for it, maybe 80% of the price you paid for it, depending on how long you hold it, of course, and depending on the price of gold. But in general, there's no other gift that you can give someone that if they ever need to, they can just sell for 80% or even more of its value. I mean, diamond loses, I think, 50% right away. If you buy a diamond ring and you try to sell it right after, you won't get more than 50% of its value. So that's really the advantage of gold, is jewelry. As jewelry, it really is a great investment or gift because its value is still there. If you buy perfume, for example, it gets used, it's gone afterwards. But gold remains. And obviously, if you're going to buy jewelry, make sure it's at least 21 karat. Anything less than that, it's mixed with other metals and it does not keep its value as much. Yeah, so that was my take on gold and why I think it's a bad investment. You might like it if you had bought gold at the right time, you might see it as a good investment. But in my opinion, I think it's a bad investment because whether it's the ETF, the index fund, whether it's the ETF or gold stocks, even if you're a long-term investor, you would be down compared to the market. And if you think that gold is a good investment when the market crashes, then basically you're saying that you're able to time the market. So if you're able to time the market, then might as well just buy a put option on any stock or a put option on the index fund on the S&P 500, because you know that the market is going to go down anyways. You would double or triple your investment that way. And even if you're a long-term holder from 2010 to 2019, so for 9 years, your investment on gold would have made nothing. So if in 9 years an investment generated me zero return, I'm not going to consider that an investment. If I have to wait 30 years to make maybe 50 or 100%, there's way better investment opportunities out there. The only way I would consider gold is if I try to time it and time the stock, companies that sell gold. For example, if we look at Gold Corp in the past year, 52-week low is 11, 52-week high is 19. I mean, maybe if it comes back down to 12, it would be a good opportunity because maybe you could sell it back at 13 or 15. I mean, it's never been this low either. This actually seems like an all-time low, which becomes very worrisome because you don't know how low it can go. But Yahoo gives it a 1-year target of 15. So I'm definitely would not, I personally would not touch this. And as for Barrick Gold, see down 5% already just yesterday. So past year, so it's neutral really. It had a good run when it went from 12.54 to 18. That was a good jump. But you really have to time it because long term, as you can see, it's just a bad investment. If you had bought it in 95 at $30, today it's trading at 16. So not only did you lose 50% of your capital, but your capital lost value with appreciation since 1995 and opportunity cost of any other investment or even a savings account at a bank. So yeah, if you have any comments, any opinions, gladly leave them in the comment section below. Like always, if you're gonna open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get between $25 and $250 back depending on your deposit. Check out the other referral links in the description below the video to help support the channel. Thanks for watching.